What's going on, guys? It's Ricky with TechBud Solutions. So just wanted to do a little recap on today's trading for ATEC. So ATEC is one that I got an alert of. Actually, we traded this one yesterday, and we had a pretty successful day when it came to trading. So this is a 2-day analysis, kind of talks about where the safety are and the resistance. So yesterday, I had a pretty strong hold above 325. Did go a little bit below it to 312, but then picked up, and then there's a resistance at 340, as you can see. It had a safety at 340 previous, and now it has a new resistance at 340. So the market opened, a little bit under, opened around, 317, gave a little bit up, so went down to 315, which is actually where I got filled in the morning, and then rode it all the way up. Because of yesterday's trade, I understood, the resistance was here at 340, so keeping it realistic. I set my limit to sell at 340. I was going to start selling a little bit under 335 since I wasn't able to get filled. But as soon as it broke 335 and their buyers showed to be buying at 335, I saw the volume start picking up, so I canceled my order, put it at 340, triggered at 340. I sold, and then right after broke 340 and then went all the way up to 372. Again, yes, it does suck that I missed out on the extra 31 cents of potential profit per share, which would have almost doubled my profit for today. But again, I am very satisfied with what I did today. Buying in at 315, selling at 340, bringing in 25-cent profit on a nearly $33 stock, so nearly 10% profit. A little bit shy, I believe 7.5% is what I brought in today, so $200 with a $2,500 risk account. Definitely, hit my target right on the dot. But again, I want to talk about what it comes down to, not being greedy. So keeping it real, as in knowing where to buy with just setting yourself up for success and understanding that where you buy is a good buy. Setting your stop loss. So I had my stop loss set for when I got filled at 315. I had my stop loss set at 310 or 309.99. Just so I knew exactly where I could stop loss out. Just because that was a safety since it didn't go below 310. Got filled at 315. Wrote it up. Saw that open momentum. Let the team know. So throughout the morning, just introduce myself again. Good morning to everyone. ATEC at 310. Talked about when we got filled, and then went along throughout the day, and kept going back and forth. There wasn't a lot of volume for ATEC essentially in the morning, and then I told them got filled at 340, huge rise 349, and then went all the way up to 371. So, and then $200 flat on ATEC. And then NUGT, breaking the $7 mark, had a huge green day today, coming in from, the low point and all the way back up. I believe, just for NUGT, since it's been having such bad days, I believe it hit 730, not too sure, and then came back down. But we ended up hopping on another one, and that is ORYX. ORYX had a pretty nice graph, and we're going to go over that one later. But again, just wanted to kind of touch base on ATEC and talking about setting yourself up for success and staying realistic and staying consistent and not getting too greedy. Yes, I could have locked in more profit if I would have held, but in the long run, when it comes to trading for the years to come, if you continue to break your rules and try to kind of in a sense milk every dime you can out of these stocks, you're most likely going to end up losing more than you're winning, just because it could hit 340 and then just dump down at 310, and then you end up stop lossing out, and then you end up losing money on the day that you could have locked in $200 profit. So in the long run, and today overall, just really excited and really thankful for the profit that we did, or I had on ATEC, and a couple others buyers followed with ATEC and locked in their profits as well. Rex didn't do too much. Again, bounce back and forth. Went down to 47, then came back up. Not too much with Rex itself. NVAX, we were talking about yesterday, being a safety at 132. As of today, it broke 132, and now it's holding at 130. As you can see, that flat line, right at that 130 mark. As you can see that it did it here. So possibly getting filled at 129. Kind of just seeing what happens tomorrow. But overall, 129 seems to be a pretty strong resistance, as you guys can see. Let's take a look at 1 month, if it allows us. Oh, this is a 1 month. But yeah, that's pretty much it for ATEC. Actually, no, it does have, obviously if it breaks 129, it could go down to 118. What is this? Yeah, 118. So understanding that is, if you get filled at 129, I would set your stop loss at 128.99 to ensure that or it does get filled sometimes a little bit lower than that. So maybe at 128 flat, just risking 1 cent, so about less than 1%. Just to make sure you stop loss as soon as possible, if you end up stop lossing that. But again, setting yourself up for success. So understanding that buying in at 129 to 130 tends to be a good buy based on the bounces that it's been having, and it has the potential to hit at least the small resistance here at 135 and then all the way up here to 140. So your overall probability for making profit is a lot higher than you losing money, and then you can stop loss pretty short, so your risk is pretty small. Now moving on to DRYS, broke their safety today at $4. I believe I'm sorry, $3.98. Came back down, and then there's at $3.77. The reason we knew it was going to start bouncing at $3.77 is because a couple days ago, if not about 10 days ago, it did the same thing right here where it had a safety right around that $3.77 mark, but then ended up breaking it, and then it had this huge red day on the 15th. So again, most likely going to be looking for that, waiting for the drop below $3.77, so set your alerts, and waiting for the bounce around $3.50 to ride it back up. Again, realistically, probably not going to have this huge day, but it's going to probably have like a steady rise after that, hopefully, if everything goes well. So again, wait for that upward momentum and set your alerts, and make sure you have stop losses set as soon as you get filled to ensure that if it does go below 350, that you can stop loss out and kind of control your losses overall. DGAS had a horrible day today. Went below $3, completely just wrecked itself. So if we do a little analysis on how it was yesterday and then just the red day it had today, it looks like it bounced right around the what is this, right around the 370 area, and then came back up to highs of 380 and then came back down. So new safety at 270 I apologize, and resistance at 280. So that's about 5% profit, a little bit less than that. But hopefully tomorrow's a green day for DGAS, as it has a large margin to make up. Hopefully back to that $3 mark, which will for sure get you that 10% profit if it does end up doing that. So make sure you set your alerts and you trade according to your own analysis. GAL is another one that had an amazing day today. So I already have the graph set up, but I want to talk to you guys. Yesterday we talked about GAL, setting yourself up for success, trying to get filled around the 195, 190 mark, and stop lossing out a little bit under that, worst case scenario, right? Today it had an amazing day because of the huge partnership. Spiked all the way up to $3.50, so it nearly saw a 100% profit today, and then started bleeding down all the way down, 270, and then all the way down again. And most likely it's going to come back down and kind of catch around that 325 area. And the reason why is 325, if we write it out here, is a resistance level for the previous trend, so it's going to become a new safety for the new trend, and then once it breaks that, it'll start bleeding back down to where it was. But again, setting yourself for success and being able to realize what it is that you're buying, and being able to control stop lossing out. So again, when it comes to buying a stock, you want to make sure that when we talk about setting yourself up for success, is ensuring that you understand that it's a good buy. So understanding that 190 is a good buy, and that if it goes below 187, then you should stop loss out, as that is unknown area. Your margin of risk is about 3 cents, which is about a little bit less than 3%. So understanding that when it comes to risking like $2,000, but for the potential that it has realistically up to 223, right? Not knowing that it could go up to 380. Setting yourself for success. If you would have traded this, bought it at 190. Setting yourself for success and hope that you get to the $2, 205 or 223 mark, and then just selling there. With the huge surprise that the following morning is going to have a huge day, nearly at 350. Can't really predict these just because of big mergers or big newsletters that are released that kind of cause this huge rise. Might have been a pump and dump, but again, realistically, if you continue to set yourself up for success and you use these rules as in like, you know, stop lossing at really low percentages, then in the long run, you know, you're more likely to be successful when it comes to trading these penny stocks. So now the next one is going to be ORYX. ORYX I do want to talk about, although it did have a safety at around 175, fell all the way down to 171, and hopefully it picks back up. Picked up, you know, during the closing hours, so I'm going to do a little analysis. During the closing hours, went back up really high to the 177 mark, and then came back down, and then was kind of holding between these two areas right here of 175 to 170. So hopefully we have a green day tomorrow. Hopefully we can see the bounce at 170. Realistically, when it comes to ORYX, it tends to do pretty well. So again, setting yourself up for success. Doing a three-month analysis, yes, it has gone below that, and it has gone to 165. But again, if it goes below 170, that is actually where I set my stop loss at, just to ensure that, you know, I can control the amount of money that I lose, and just realistically setting myself up for a good day. So that is pretty much what I have set for tomorrow. Understanding that there's going to be a resistance right here at 175, and then the next resistance area going to be right here, obviously at the 180, and then the next resistance after that will be around the 183 mark. So kind of hoping for that, and then gonna go and see. But overall, ORYX tends to have, you know, a pretty nice graph, tends to hold pretty well above 175. So I think we got in at a pretty good point. Just gonna have to see how it plays out tomorrow. So now I'm gonna answer a couple questions that I actually received from one of our traders. Hopefully this video isn't too long, but his name is Jared, and he had pretty good questions. And one of his questions is, how do you choose which stock you want to invest in? Do they have a certain characteristic that other stocks don't? So again, when I let the team know about ORYX, when I went about and letting them know about, you know, where it's at and stuff like that, let's see when I introduce it first. I believe that's actually the time. So limit at ORYX, kind of just talked about the reason I found this one so attractive was because it held very well above 175. I saw potentially, you know, the possibility of going below 175, which means that, you know, if I can get in anything below 175 overall for ORYX within the past, you know, days of trading, past couple of, like, you know, weeks, it's been holding above 175. So again, setting yourself for success when it comes to, you know, seeing a trend that it bounces between, you know, 175 to 183 and highs of, you know, 195, and the potential loss, you know, from 175 to 165. And the reason I know it's 165 is because I really looked at this graph. So it's gone lows to 165. The risk that I'm taking, I see, you know, a lot more potential with, you know, the profit that I can make to the amount of money that I can lose. So with that, you know, I found this an attractive stock. I see a lot of potential, and there's nothing wrong that I saw when looking into the news, the newsletters, and for ORYX that kind of, you know, gave me any red flags. But that is pretty much what the thought process when it comes to, you know, discovering a stock. I do, you know, a bunch of analysis daily, so I look through about 50 stocks every day, and kind of look for the best trends. And again, just setting yourself for success, having a plan, knowing where to buy, where to sell, and where to stop loss at, kind of leads to your success of trading. He also asked, how do you research on a company, and what specifically are you looking for? Again, so these stocks have newsletters, so whichever company you are using to trade, they usually have a news section, so you can look into that, or you can do, you know, different forums, which I don't usually recommend, as they tend to be pretty biased, depending if they're, you know, if those individuals are already invested in ORYX. They tend to be pretty biased. But I say, you know, you're more than welcome to call a company, look at the newsletters, look at their, you know, disclaimers and stuff like that, and kind of have a better understanding of how the company is doing, the type of company it is, and what it stands for, and how that overall, you know, market is doing in the economy, can kind of determine, you know, how that company itself is going to do, you know, during that time of year. Even though that, you know, that company isn't essentially that. Like, let's say gold. Gold took a big dip. Nugget took a big dip when gold took a big dip. So with that, you know, they kind of go back and forth on, or they're correlated to one another, and their success when it comes to the stock market as well. And then he also asked, if a stock breaks a resistance level, how long should you wait to buy in? There's no limit. There's no like time frame that you should wait to buy in. It's pretty much, well, when it comes to trading penny stocks, it's all about being fast. So when it comes to, like, let's say ORYX, right? I mean, it has pretty low volume. But let's say, you know, we see the bounce at 171, it goes from 171 to 172, and then it goes to 173. That would be considered upward momentum. And if you could see that overall potential, you know, it's pretty well with ORYX when it stays above 175. So filling at 173 when you see that upward momentum, you know, you buy in, you ride it, then it breaks 175, you ride it, and then you sell. That's pretty much the thought process. There is no time frame or any other, like, you know, like specific, you know, indicators that tell you, you know, if the stock is a good buy or not. That's the whole point, that you have to analyze these stocks and make the decision to invest or not. So it is you taking a risk on, you know, the potential or the opportunity that you as an investor see in this specific company themselves. So in one of your videos, you talked about stop loss not being able to fill on time. What does that mean, and how does that happen? So when the volume is too high or too low, let's say, you know, let's say I bought in here at 182. And I was hoping to go above 183, but it didn't. You know, it continued to drop, and I had a stop loss set at 181, at 170, or what is this? I have it at stop loss at 179.99. So what that is, you know, let's say the volume is so high and it just continues to drop and my order doesn't fill. It's gonna fill at that, you know, at whatever price point I can catch at. So if the volume is too high or too low, that not enough orders are out there for me to get filled, then I'm gonna have to wait till, you know, it properly executes. So that's what I meant by that. So when the volume is usually too high, it's harder for you to fill at the price point you want, because the price can drop a lot quicker than what you're willing at what you're able to buy at. So that's what I meant by that. So people talk about penny stocks being a big risk, but if you set a stop loss, doesn't that minimize the risk? And that is essentially why stop loss is such a big thing with TechBet Solutions, and why it's been, you know, helping so many of our traders to be successful on being able to control how much money they lose. Like, yes, a lot of people don't know about stop losses and don't know, you know, but basic fundamentals of trading and all the tools and resources that you could, you know, utilize to become a better investor. So understanding of the tools and being aware of them and being able to utilize them daily and actively every single day as you trade will be, you know, the reason you become successful when it comes to trading penny stocks. So again, if you buy in at 175 and you stop loss, you know, right after that, and you get filled, then yeah, realistically, and you continue to do that, realistically, you should have a pretty successful, you know, pretty successful career when it comes to investing and trading penny stocks. So I think, you know, that's a big point that you're touching based on, and just be sure, you know, you stay consistent and you go by your rules and you don't. Jared asked if you buy two different stocks with $2,500 each, so total $5,000, is the 10% gain the same amount? Does the amount of shares not matter? Only if the stock goes up 10%. So the reason, I guess, the stock doesn't, the shares don't really matter. It's about the percentage and how much, you know, each like share increases by. So if we see a 10% increase on, you know, let's say at ORYX at 171, we'd have to see an increase to like 188 in a sense, right? So once we see that increase to 188, we saw a 10% increase per share. Therefore, our overall account, since we invested, you know, we have an average at 171, meaning that, you know, all our shares got filled on average at 171. If we sell at 188, then we saw a 10% increase on our initial investment, meaning, you know, if you invest $2,500, then you saw a $250 return. So if you do it with two different accounts, then you saw a 10% return per, you know, per stock. If you risked $2,500 per stock, you saw a 10% return. That's $250 of profit per stock and per investment. Therefore, 500, you know, profit total within, you know, the total $5,000, which is still 10%, you know, of the $5,000. So it all adds up. But hopefully this video isn't too long. Thank you guys again so much for tuning in. If you guys haven't done so already, I do answer all the questions and I try to go through all the questions as soon as I can. TechBet Solutions is a group I started to kind of teach traders the fundamentals of trading penny stocks. So if it's something that you think that you could benefit from, please feel free to ask to join, and then email me for the welcome document. That email is actually going to be down below where you can email me, and also the link that will provide you to join this group will be given to you. And then with that, you guys can join us daily and actively trade. And we just want to make sure that we stay consistent and continue to promote the overall experience and the overall welcoming experience that we're trying to promote for our new traders. So thank you guys again so much for tuning in. Let's make sure that we end this year on a green note, and hopefully you guys do well as well. Take care, and we'll see you guys soon.